get stock specific now. We have Havells India posted a largely inline set of numbers. The company saw strong growth in the switchgear segment, and that was due to construction-led demand. The revenue too up almost 10% on a year-on-year basis. We have with us Anil Rai Gupta, who's the chairman and managing director of the company. Thanks a lot, Mr. Gupta, for joining in. You, in the conference call, alluded to some weakness or, non-sustainability of some of your segments in terms of growth. Could you give us a sense of how consumer demand has panned out in the quarter that we're currently in? And if at all, some sort of inkling on the growth one can expect for the first half of this year?
Well, I think if you look at just the quarter, I would say that the industrial and infra segment demand has been strong. One, generally in the fourth quarter, there is increased purchasing from the government sector, but also the fact that, overall we've seen some improvement in the industrial and commercial segment in the last year. Overall, if you look at the entire year, the consumer demand, we started off well in the first 6 months, has been a bit low in the next 6 months, maybe because of the interest rate rise. And overall, I would say that, on one side, the demand has been tepid on the consumer side, but also the fact that the raw material prices have also stabilized, which is also helping the margins. So all in all, if you look at the entire year, the growth aspect, I would assume that it would be better in the coming times, but it was a mixed bag. But margin improvement is definitely happening and continue to be like this. It'll improve.
Okay, all right. Hi, Mr. Gupta. Margins improved. Now, the good news for someone who's consuming these metals is your business. You're going to be a beneficiary of this cooling down of prices, right? What kind of a margin band can you guide for? How much better will it be in FY24 in comparison to FY23?
I believe, last couple of years, we'd seen high increases in the metal prices. And generally speaking, we pass it on to the market. But because of the unprecedented rise, some of the cost, some of the absorption had to be taken. And hence, the margins were squeezed over the last 1.5 years. I think with this stabilization, we expect that the margins will come back to normalized levels, what they were before this unprecedented rise. So we should be looking at normalized margins in many of our businesses in the coming year.
But, nowadays we have come through a pandemic, so normalized has a full new meaning. You want to give us a range for the entity on the whole, early teens, what should it be? 12, 13%?
Yeah, if you look at Havells' core business, generally it has remained between 13 to 15%. So hopefully in the coming year, we should be looking at those kind of numbers.
All right, that's for the core business. Let's talk about Lloyd's then. I mean, 32% growth, if you could break that up in terms of how much of that was volume-driven, value-driven. You did allude to some sort of market share gains out there. Could you quantify that? And at what point do you turn positive in Havells? Because revenue is growing. The street wants to know, operating leverage, when that kicks in.
I think overall we are quite satisfied with the fact that Lloyd has seen 32% growth in the quarter, but also overall around 50% growth in the entire year, which we believe that we are looking at Lloyd as a real long-term growth opportunity because it's a large market. There's huge potential. The air conditioner market, where Lloyd is very strong, is also at an inflection point where we believe that the growth in the coming years will be quite good. So our investments are happening in a big way, both in terms of manufacturing, R&D, as well as the brand building. So that will take some time for margin expansion to happen. But overall, the revenue growth has been extremely strong. So we do believe that we've gained market share. The market growth has been lower than what we have been able to achieve, which is 50% growth. And we continue to remain amongst the top 3 players in the air segment.
All right, Mr. Gupta, we normally play the tape and then come and, have an interview with you. So for the next interview, we would like to get a number out of you. What is your market share as of now? You're in the top 3, we get that. And also, let's just pull up the financials of the AC segment that should come up for our viewers on the screen. You're almost breaking into the green on the EBIT front. At some point of time in this year, do you go into the green? So 2 numbers I'm looking at. One is, will you move into the green? Number 2, if you could tell us what is your market share?
So I think a lot will depend upon the growth in this year. And as far as green is concerned, as I said, we'll continue to invest heavily in brand building and manufacturing. So I think we do believe that the next 1 or 2 years is a long-term journey for Lloyd. So whether it's 1% negative, 1% positive, it doesn't really matter a whole lot, but because we are in a long-term journey for growth there. In terms of market share numbers, I would say that it's because there are so many. It's unlike the auto industry. It's very difficult to give market share numbers because there are many agencies who are looking at market shares. So if you look at some market pulse numbers and all that, the difference between us and the next competitor may be 2 times, but actually production levels don't show that. So I would be happy to say that we look at the production figures and we are amongst the top 3, and that's how we continue to look at. I would be very wary of seeing selected market share numbers from agencies.
Mr. Gupta, I wanted to understand your peak revenue from the Sri City plant, which has been commissioned in the 4th quarter. Back of the envelope calculation suggests it could be anywhere between 2,700 to 3,000 odd crores. By when do you get there? And this again coincides with the previous question that Nigel asked with regards to operational profitability. We take your point that you are investing in this business for the long haul. At what point does the inflection come in, and when does it normalize to your current core business margins? Just wanted to understand this, the utilization ramp up of the Sri City plant, and when the margins normalize here, when you stop investing here.
I think we've taken a big bet in terms of the market expansion for air conditioner segment. So the Sri City plant is a 1 million capacity. As you rightly said, it could anywhere mean, if at 100% capacity utilization, 25 to 3,000 crore revenue. But it will take, these are branded products, distribution-oriented products. It will take some time to reach there. But at these numbers, definitely we expect the business to be profitable. Whether it takes a year or 2 years, we're not very sure. We will take some time to reach there because we don't want to just dump the market like a commodity. We are there for the long term to have the consumers start preferring the brand and the product and have the distribution penetrated fully into all the markets. So it will take some time to reach, but obviously we have created a capacity. We'll also be looking at some export markets to fill up this capacity, because that's also, again, a long-term haul, because we need to get our products approved in various markets. But that's also something which is on the cards.
All right. Mr. Gupta, I've got a couple of messages from our viewers saying that you guys are only focusing on the AC segment. What about the fans? They are telling me that you have increased prices in the last quarter. Any more price increase? If you could quantify what was the price increase in Q4, and it's getting so hot, maybe the electricity bill as well is weighing down. So it's time to put on the fan. I mean, are you all going to be increasing prices even in this quarter?
I think the price increase happened in the start of the quarter because of the ratings change, energy ratings change. Yes. And that has stabilized now, and we anticipate no further price increases because the raw material prices have remained stable in the last couple of quarters. So we believe that the market prices should remain stable. Unfortunately, because of unprecedented rains, I would say we would expect a better summer, both for ACs and for fans, both in the month of April and March. So things have been slow in terms of tertiary demand for both fans and ACs. Let's see how May and June goes, because summer is still away. Summer is still there. So we hope that we should be, getting in some lost sales of March and April in the month of May and June.
All right. And finally, before we let you go, Mr. Anil Rai Gupta, the FY23 is the first normal base that we have as we start at the cusp of the start of FY24. What is it that we can expect on an overall basis with all the building blocks and environmental challenges that you faced this year? Can we see a double-digit top-line growth? If yes, then early teens, mid-teens. If you could give us a sense of the overall business top line that one can expect in FY24.
Frankly, I leave this to finally what we do. I mean, just like Geeta, we would like to focus on our karma, and the pulp should continue to come from there. So we are constantly, innovating. We are constantly expanding the distribution brand, and hopefully that should reflect in growth numbers which we have been able to achieve in the past. So we should be looking at some decent growth in the coming year.
All right, decent growth is what analysts should pencil in, with 13 to 15% sort of margins for your core Havells business. Lloyd's will ramp up, as you say, will continue to invest in that business for the next 1 to 2 years at least, while taking note of all the other verticals as well. Thank you so much for joining in and giving us the outlook on your business itself. Mr. Rai Gupta, always a pleasure speaking with you.